Estate Entrepreneurs Podcast.
Welcome to the Real Estate Entrepreneurs Podcast. Today we have Mr. Chris Miles with Money Ripples, who's going to tell us how to create multiple streams of income. Chris, that's been one of the, I would say, of the topics that we've talked about a lot in the last few podcasts that I've done with multiple people. And I'm actually glad that you're here today because we've been trying to do this for a while now. Like we've been playing the last two times it's been my fault that we couldn't do the podcast, but luckily today you're here. Just so people know, Chris, can you tell our audience a little bit about yourself? Like, where do you come from? Where do you grow up? Where do you go to high school? Do you come from a rich family? That kind of deal, right?
Yeah, I definitely didn't know I grew up in a rich family, very middle class, type of family. I even lived in a trailer park for 5 years, but we had the double wide. So we were like the fancy ones in the neighborhood, right? Instead of the single wide trailer.
And if you have a triple wide, man, you made it.
Oh yeah, definitely not triple wide. I was actually just sharing with my wife where, you remember, I don't know if you remember like Jello jigglers, like they're like the Jellos you can make in little shapes like stars and whatnot. I would throw them up and stick them up on the roof. My wife said, "I can't believe you would do that." I'm like, "Well, it was a trailer. Nobody gave a crap. We trashed it,
What city? Where was that?
That was near Portland, Oregon, is where I grew up.
Okay.
Yeah. So live in Utah now, but I was raised by good parents. I mean, they taught me good values, work hard, your word is your bond. They also taught me about following your dreams, your passions. My mom had done that herself. However, when it came to money, that was the one thing they really agreed upon. They didn't agree on much, but that was one thing they agreed upon. And it wasn't a good way. It was about how there was so little of it, right? There just was never enough money. Hey, we can't afford this. What do you think I am, made of money? Money doesn't grow on trees, those kind of phrases we'd hear growing up. And so I vowed I never wanted to be that way. And so when I went to college, at first I thought I was going to go more in the corporate world, but then I realized if I want freedom, control of my own time and my own destiny, I should go more the business route. And so I was going to become a business consultant, but I figured if I'm going to do that, I should have real life business experience, not just a little piece of paper that says I got this business degree.
Right.
So I actually took a sabbatical from college before I got my degree and just took a year off. And I said, I'm going to find some business to start. And the first one that came up that intrigued me a little bit was actually becoming a financial advisor, the traditional salesman in a suit, that kind of thing. And so I started going down that path to the point where I actually stayed dropped out of college. I never went back to finish my degree. I started going the entrepreneur path as a financial advisor. And after about 4 years, then my father, who again was the guy who was like the ultimate penny pinching saver. He was the guy that was super duper cheap, would always tell me, save everything, spend nothing. And then, your life should be better. Well, even after, following his advice, even supposed to be getting my college degree, he told me, be sure you get the college degree because I was the first one in my family to go to college. Well, as time went on, I went and sat down with him and to become his financial advisor. Never saw his money situation before. It was the first time I saw his financial situation. And he showed me everything, opened his books. I saw that he was debt-free. He paid off his house and everything.
Which is a good thing, if you think about it. Hey, you're debt-free, house is paid for, why not, right?
Yeah. I mean, he did everything that Dave Ramsey would tell you to do, right? I mean, he was debt-free in 18 years. He had stuffed money in his 401k, got the match. And then when I looked at it, he said, "Okay, Chris, I want to retire at some point." I said, "Well, Dad, if you want to retire today, you better hope you die in 5 years because that's when you're going to run out of money."
Wow.
And of course he was saying, "Well, that's not what I want, Chris. What do I do?" And my answer was, "I don't know. I honestly don't know. I could throw you into this little stock type investment or this annuity, but truthfully, I can't guarantee that you'll get better results than what you're doing today."
Wow.
Basically, what you've been doing is just not enough, even though he saved everything and paid off his debt. And that disturbed me to the point where a couple weeks later, I was talking with a friend of mine that I trained to be a financial advisor. I had trained him, but then he left just months prior to go do this crazy thing called real estate investing, right? He decided he was going to become a flipper. Well, I called him up and I asked him like, "Hey, how's life going?" And I expected him to say he was broke and he wanted to come back to work for me as a financial advisor again. He didn't say that. Ricardo, what did he end up saying instead? He said, "Chris, my life's amazing. In fact, my dad and I have partnered on deals, and we've doubled his income as a professor at the local university." I said, "Wait, you've doubled his income in just the last 4 or 5 months? That's too good to be true. There's no way that's possible." And he asked me, he said, "Chris, how many of your clients are truly financially free where they don't worry about money?"
Hmm.
I said, "Well, they all worry about money. Even the ones in retirement worry about running out of
Yeah.
money soon." "Okay, Chris, how about this? How many of you guys as financial advisors are financially free, not off the commissions you're earning, but actually doing these mutual fund investments?" As I really honestly thought about it, I said, "Well, there's guys been working in our office since the late 1970s. This is in 2005. So I'd have to say none. None of them are financially free." He says, "There's your problem, Chris." And that started getting me down a rabbit hole. I started, understanding who his mentors were in the real estate game. And eventually I quit being a financial advisor. I realized that what I was teaching wasn't working. So why would I keep selling a dream that's false?
Now, what kind of products were you promoting at the time, Chris?
Oh, the traditional stuff you'd hear about, mutual funds, insurances, things like that. The typical retirement planning type of stuff.
Got it. So I grew up. My father is a financial advisor, and I grew up in the life and health insurance world. Like
Mm,
I started working for my dad when I was 8, and like literally, I went to the office every day, and I asked him to buy me a suit because I wanted to be like him. He was the perfect salesman, right? A tie and
oh,
a
yeah.
suit, and so I started like being his secretary's helper.
Uh-huh.
If they needed a file, they said, "Ricardo, we need Chris Miles' file," and I'll go to the file cabinet. I'll pull the file. I'll give it to them. Now he did a lot of property and casualty here in Venezuela. I'm actually in Venezuela
Mm,
right now,
yeah.
and his office is not too far from mine. And I, by the time I was 20, I was running all the operations in his company, but I was
Mm,
also selling life insurance, and I was one of the closers for most of his agents. So because I was so young, I was not afraid to ask for the sale and
mhm.
to tell maybe a 30 or a 40-year-old person that they were literally dirtbags because they didn't have insurance for their family, when they pass away.
Yeah.
Believe it or not, man, I was the guy collecting the check and getting the signature on the application many of the times, because a
Mhm.
lot of times those agents, because they had a relationship built with these clients, they didn't want to piss off the client by saying, "Okay, give me, I don't know, $10,000 worth of premium and you got to
Mhm.
sign here." And the client was like hesitant. But here comes this kid who's 20 or 19 or whatever. I didn't care. I didn't have a relationship built with those guys, but I knew they needed the product
Mhm.
and that they were being irresponsible by not having a life insurance policy. So my dad calls me one day and says, "Hey man, I cannot believe you're closing all these deals for these people." And I was like, "What do you mean?" He said, "What are you doing different
Mhm.
than them, that because they cannot do it on their own?" And I was like, "Well, Dad, I think this is what's going on. Is that these guys have a relationship built with all their clients, and when it comes to closing the life insurance policy, they have a problem collecting the check and the signature, and I don't have a problem collecting the check and the signature. So I don't have a
Right.
relationship built with these guys." Um, and also I'm younger and I'm telling them, like, if I, like, I've had, I don't know how many times, an instance where the wife will tell me, "Well, but my husband is not gonna die." And I was like, "How do you know that?"
Mhm.
Yeah, because sometimes they justify not doing things, like even
Yeah.
the wife will say things like "My husband is not gonna die." How do you know he's not gonna go out there tomorrow, get on a car accident, and now you are in jeopardy because you have no savings, you have no way of burying this guy, like doing funeral services. Your kids are going to be left alone, and you're not going to have the money for the private schools anymore. And so I will be the one creating all this awareness, and that's what made me a good life insurance guy. But at the end of the day, my dad and I couldn't see eye to eye when we were working together, and I decided to go on my own. And he claims he fired me. I claim I left on my own. I really don't remember.
Yeah.
Um, but that's why I ask you, is because I was involved also in the life insurance business, and I actually invest heavily on life insurance policies. I think that's my number one, honestly, aside from real estate. My number one investment vehicle is the one I trust the most.
Yeah. It's a strategy that we also, leverage and use with our real estate investing or business owners and things like that too. Especially, I mean, not just for the death benefit, but a way to really amp up the returns in your real estate investing and whatnot. And yeah, it's an interesting world, but I didn't even learn that as a financial advisor. I had to leave the financial advisor world to learn the best strategies when it came to investing, right? I had to, because I realized that, I mean, it was March of '06. I remember going to a seminar and just hearing someone else give an outside perspective of the traditional financial advice, right? Like, you're in it for the long haul. It's a very common thing you hear when people talk about retirement, Well, when the market goes down, how long does your long haul become? Because I remember there were several of our clients that I had worked with, and when I came back into the financial business, but not as a financial advisor, I'm more of an anti-financial advisor, telling people to not use them, right? And when I came back in, like, there's people that I remember, it wasn't until about 2014 or 2015 when people said the money I put in the market in the year 2000, it's finally got back to breaking even. It was like 15 years before they
Wow.
broke even. And when you factor in inflation, really, they're still had lost about half of that money to inflation, right? So in truth, most of those people never saw their money get back to where it was in 2000, purchasing power wise, until about after 2020. Yeah, that's a long time to wait for your money to come back for you. So I realized that really that whole industry, right? The high risk creates high returns. No, it doesn't. High risk, a higher chance of losing creates a higher chance of winning. No, it doesn't. No, a higher chance of winning creates a higher chance of winning, right? I mean, that's all the things that we do as real estate investors and trying to manage risk and things like that. We want to lessen that risk as low as we possibly can so that we make the most money and create more wealth. And here's the big epiphany to me. My shirt kind of says it all, is that
Cash flow freedom. Yep.
cash flow equals freedom, right? Like, I was always teaching people to accumulate money and then live on less than the interest. Like, the current trend, right? The current calculations are saying if you want to retire, you should only pull out 3% a year when you start retirement, right? 3%, not 4%. That rule, by the way, that 4%.
That percentage is based on the principal or based on the gains. What do you base it on?
Principal, yeah, just
Okay.
what's in there. So if you have $1 million, you're told not to pull out more than 30,000 a year, and then only increase with inflation, right? And they came up with the 4%. If many people talk about the 4% rule, they only came up with that in 1974, right? This is before the U.S. had taken the dollar off the gold standard, right? They were doing a 50-year study from 1924 to 1974 when this guy did that. It was never a rule. It was just a guess based on, what happens to the markets going up and down, what's a safe number to pull out. Well, now they're saying 3%. So if you happen to save up $1 million, you can pull out 30,000 a year. But understand that's rare, because if you look at Fidelity has 45 million clients in the United States. 45 million. Of that 45 million, only 810,000 have at least $1 million saved up. That's not because people aren't saving money, because there are a lot of people stuffing money away into those 401ks. It's all because the market doesn't return as much as they think. I mean, even in the last 30 years, the real rate of return to the market is only 8.4%. And that's actually really good. Most 30-year periods I've done is usually between 7 and 8%, never usually breaks 8. So to get 8.4%, if you're lucky, right?
And that's
By the
not
way,
counting inflation or anything like that, right?
that's right. And taxes, right? You got to still pay taxes. So even somebody who's lucky enough, that 810,000, that means only 1.5% of people have $1 million or more. And of that 1.5%, Transamerica did a survey asking them how confident they feel in retirement. And 35%, over a third of that 1.5%, said they'll think it'll, quote, take a miracle to be able to retire. A miracle. Like, they don't even think that's enough, because again, they're looking at 3% saying, if I have $1 million, 30,000 a year, that's not even enough to live on, especially depending on which state you live in, right? In the United States here. So So there's a lot of people. And of course, if you pull out 30,000 a year, you pay taxes on it. So you're really living on $2,000 a month as a millionaire. You're a broke millionaire living below the poverty line. That to me is just criminal, right? Because as a financial advisor, I had sold people on really selling them the dream, right? I got people buying hopium, right? They're smoking hopium is what they're
That's right.
doing, hoping and praying that they're going to have enough money, only to find out that it's been proven it doesn't work. And and that's what got me out. That's why I said I had to leave. I never was going to teach about money again. I was just going to be a mortgage broker, and I was going to do ballroom dancing, teaching ballroom dancing on the side. And so, but as time went on, I started learning about what is true in the real estate game, which in real estate, it's not about accumulating money to live on less than the interest. It's about creating that passive income, that cash flow, right? And this is the epiphany I had, because if someone had $1 million in the financial advisor world, you're really living on 2,000 a month after taxes. But in the real estate world, even if you only pulled out, say you only made 10% a year, that's $100,000 a year you're able to live on without touching the principal. 100,000 a year. And depending on the type of real estate you're investing in, you might even get tax advantages and keep a good chunk of that money too. That's way better than 2,000 a month, right? 100,000 a year versus 2,000 a month. And when I realized that, I said, oh my goodness, this is amazing. Because even somebody made 1% a month, right? Now they're living on $10,000 a month instead of 2,000 a month. I just, all of a sudden I had hope. As someone who just quit being a financial advisor, I could start to see the light at the end of the tunnel. And that's why later that next year, I was able to retire myself when I was 28 years old, because I just had to have enough passive income come in. Now, I wasn't a good active investor. I did do that a little bit before the recession, but honestly, I'm a horrible property manager. I did better invest my money with active real estate investors like yourself, right? People that actually were doing the work, the ones that were doing flips or whatever it might be, and lending them money and getting paid a contractual return. Or, even if I did have rentals, I eventually learned I'm better with turnkey rentals, having a property manager do it for me versus me doing it myself. Because the truth is, I made less money when I property managed than when I get a good property manager to manage it for me. Because I'm a pushover. Somebody says, "Oh, I can't pay on time. Give me a little more time." I'm just going to do it.
Yeah, that's my problem too, man. It's hard for me to evict somebody. Sometimes a certain time, like evicting an 80-year-old lady is hard. Like
Mhm.
where is she gonna go, right? Just because their kids are not good enough or whatnot.
Yeah.
It's for me that's hard. That's why I'm like I'd rather not do that.
That's right. And that's one weakness I've seen with a lot of real estate entrepreneurs, right? I mean, that's what this show is about. I mean, when you and I have a lot of friends in the wholesaling and flipping space, now you can make sick amounts of money. You can make literally millions and millions of dollars in that space. But the one thing that people new in the business tend to forget is that it's very transactional. You got to keep hunting and killing your food in
It's a
order to
rat
eat.
race.
It really is a rat race. It's just a very cool rat race, right? It's a very high stakes, very high revenue rat race.
Very low entry. Like you
Mhm.
don't have to have a degree. You don't have to have a license.
That's right.
You have to learn the mechanics and the process behind it. But it is still a rat race. I tell people all the time that, oh, I want to be a real estate investor. So why? The
Mhm.
passive income. It's like, buddy, there's nothing passive about any of this.
Mhm.
That
That's
I
right.
don't know who gave the name of passive income to like rentals.
Mhm.
Whoever did it was selling something that people were buying on, but being a landlord, there's nothing passive about that,
No.
because you gotta collect rent. Things break down, and you gotta do
Mhm.
evictions. You gotta go to court. There's so many things you have to do as a landlord that I'm like, okay, wait a minute. Why would I want to put? And this is the analogy or the exercise that I did. I went and I took, okay, for me to create $400 a month on cash flow, okay, on a rental. I have to buy the property, rehab it, put a tenant in it, refinance it, and now I can cash flow 300 to 400 bucks.
Right.
Or I can do marketing, talk to the sellers, put the properties under contract, and sell them, which is basically the same effort that I'm doing on the other side, but I have to commit to a lot less because I don't have to put my name on a loan or anything like that, and I can make I don't know, $20,000.
That's right.
Why? And so I'm like, okay, they're tax different, and yeah, with one I have a lot of tax benefits that I don't with the other one.
Mhm.
But I'm like, you know what, man? If I'm gonna be transactional like that, I just rather go for the big check as opposed to the little check.
Yeah,
And I'm not saying the little check is bad. No, you stack enough of those, and they
Mhm.
become very good.
That's right.
But I'm like, it's not for me. I rather, and I've done it, Chris. I got to 107 rentals,
Yeah.
and I didn't like my life at all. At all.
Yep.
So
Absolutely. Well, you
so
brought up two really good points there. I mean, one, where did passive income come from? The IRS. The IRS called it passive income, right?
okay,
But what we're seeing now with social media, especially, is all these guys, a lot of them are friends of ours, right? They're saying, hey, I turned $200 into $1 million. Here's how you can do it with passive income, right? And you're right. Almost everybody, and I don't know who the previous guests were that you had just interviewed recently, but I would guarantee almost all those guys are not truly talking about passive income. They're talking about active income in the real estate space, right? Just like you're talking about.
yeah,
And if people realize that what you're talking about is really being an entrepreneur, a business owner, and it's not just real estate, there's other people that get caught in this little rat race that are business owners in other fields, right? Where they're constantly, they can make good revenue, they can make good money. But like what Mike Michalowicz teaches in the book, Profit First, is that if you're always reinvesting 100% of your money back in the business, you're not profitable, right? You're spending money in the business. You might keep increasing revenue, but at some point you're going to say, when does it stop, right? Where does the rat race end for me? And so you gotta have a balance. And you're right. Like I don't own 100 doors. I don't have to have the ego thing. I gotta have that 100 door, that 1,000 door mark. I remember when Pace Morby and I had that discussion on our own podcast. He's like, I got to 1,000 doors, and so what? Like I was working so hard for those 1,000 doors. What? So when I could be having time freedom, like he was talking to another guy that had only like 25 doors, and that guy was way more free than Pace Morby was, right? And Pace had, you know, what is that? 40 times that, in doors and stuff. And so it's really about designing the life that you want. Like for example, with way I do my real estate investing now, I do things very passive. I am very hands-off investor now. I don't, I respect everybody that likes to do flips and they like to do wholesaling and stuff, but I realized that I just didn't want to do that. I'd rather spend my time doing other stuff. So yes, I have rentals, but again, like I said, if I get a rental, I get a turnkey rental where somebody else manages it for me. And that's probably the least passive thing I have, because every once in a while, there might be an issue that pops up from the property manager. They deal with almost everything. But, if there's a decision that has to be made, ultimately it comes back to me. But again, I don't get bugged that often. So I'm actually okay with that. Unless you have a bad property manager, then that sucks, right? Then it's definitely not passive when you get a crappy property manager. But I'll do other types of investing. Like for example, I'll lend my money to other investors, and I'll usually require at least 10 to 15% a year for lending my money to real estate investors, whether they're doing a flip, and I'll be the bank, so I can even have my name first trust deed on titles just in case something goes wrong. I at least have the property to claim, so I have some security there, right? I could do lending funds. I have several friends that just say, "Hey, I'm just going to do a fund, and I'm going to do multiple projects all at the same time." Like I've got really good friends that do that. Some of them are in our masterminds together. There's even things like, there's syndications, although syndications have been beat up the last couple of years, especially in the apartment space. But pulling my money with other investors where I become a part owner in something. But it doesn't have to be apartments, or it doesn't even have to be self-storage, which is another one. It could be like a franchise business, like a car wash, where again, somebody else is the operator. I'm just the financer. I'll tell you my favorite one right now, other than oil and gas. I got kind of some cool investments in oil and gas space where I get paid royalties from drilling out in like West Texas or
but
whatever.
those are high risk too, right? You like
Depends. It depends on which ones you get. If you do the ones where they haven't drilled and discovered yet, that is high risk. You get all the tax benefits with those. They're called working capital type of deals. But those ones I don't touch. They're too high risk. I usually go for the ones that already have wells that have been drilled. They're already getting stuff out of the earth, and so I end up going in with partners to buy the land, and then we get paid the mineral rights from the oil companies, because most oil companies don't want to buy the land. They just want to
right.
drill it. They want to rent it. So they pay you rent by paying you royalties. And so that's been a little bit safer. I'll tell you though, sometimes it's a slow burn depending on how many wells they have, because usually you buy them early on when they don't have all the wells drilled. So they have some wells producing already when you get in, but you make a little bit of cash flow, but it gradually increases as they put in more wells, more activation as they call it.
Right.
So it's good, but you're right. And you get a little bit of tax benefit there, but not amazing because you're not doing all the speculative work. You get more with the speculative stuff.
You may rework the well and do a workover and get it to produce more, but that's about it.
Yeah. If you're doing that, it's different. But if it's one of those where they've got like massive lakes underneath it, so to speak, right, of like oil lakes, oil reserves, it's great. But yeah, my favorite right now actually is actually raw land. That's been fun because I got partners where they're doing all the work in that sense, right? I'm a 70% partner, they're 30%, but we've gone in together where they're buying raw land at wholesale, flipping it at retail, but doing it on terms. So we finance it. We're doing seller financing basically.
So you're becoming the bank.
Exactly. You become the bank, right? So for example, like I just saw one of the recent deals I did a week and a half ago where we bought it for about $25,000, sold it to the retail investor or the retail buyer at $74,000. So about triple the price, but we're doing it over 15 years at 10% interest. So, that 25,000 is making me $10,000 a year of cash flow, right? Which is awesome. I love
Huge
that.
return.
So, huge returns. Yeah, I love it. So that for me has been my favorite. I mean, I've put in a little over 400,000 that we've been reinvesting cash flow into. So total investment's been about 400,000 or so, even with the startup cost of the business. But right now we're over $11,241 a month currently.
Wow. So when did you get into real estate? Like, was it 2006 or?
It was. Yeah, it was right after. Really, it was right after I quit being a financial advisor. Yeah, I got into real estate. I was doing more. I actually, without knowing it, I was actually doing these very under the table wholesale business that I had. I was doing some rentals as well. I actually flipped to an investor my very first starter home and then leased it back from him to then sublease it out to a renter.
Wow.
I did that just to strip all the equity out because back then an investor could actually do it with a 0% down payment if he had good enough credit score. So I'd sell it to the investor at full appraised value, turn around, pay them a little bit more than their mortgage payment. So that essentially for them it was an infinite rate of return. Even if they made $100 a month off of it,
right?
It was nothing out of pocket, right? So it was a great, easy sell. And then I turn around and try to rent it out as well. That's when I found out I wasn't a great property manager because even though it was five minutes from my house, it wasn't like a long drive. Still, I didn't want to be the person that had to do like cleaning checks, and checking up on the property and stuff. I just wanted to get paid. And so I found out later I ended up renting to the wrong people just because they were in my neighborhood already. And they were just moving a couple blocks over. I should have known when I went to their house, the house was trashed. I should have known they would have done the same to mine, and they did. And then 2008 hit too. So 2008 hit, they stopped paying me rent. I evicted them, had to clean up the place. I was lucky to kind of break even. So it went from my most creative real estate deal, because obviously I went to lease the property back after selling it to then sublease it. Most creative deal, but it became one of my worst deals eventually.
Headache. It became a headache.
What's that?
It became a headache.
It did. It really did, especially because I did it at the height of the market, right? So it was very hard to get out from under it.
So that was your first deal. And how long were you into that deal for?
I was into that one for 2 years. Yeah, it was about 2008 when we let it go. We eventually just sold it. Luckily, we sold it for about what we owed on it. So I was able to help get the other investor out of it. I mean, with costs and everything, I probably put another 15 grand into it. So we probably lost a little bit, but not nearly as much as we could have had we been later into the recession.
Okay. And have you ever flipped a house, like bought it, fix it all up and renovated it, the whole thing, and then put it on the market and sell it?
No, I'm not a very handsy kind of guy. The most I've ever done is I renovated the new house I'd bought to finish the basement and everything. I was going to turn that into a rental. But by the time it got done and I went to strip out the equity, by the way, this is interesting. This was actually July of 2007 when I finally got it done. And I went to the bank and the bank said, you know what? We just recently changed some rules. And this is again July of 2007. This is before all the news was coming out, right? They
Right.
said we just recently changed some rules, so if you get your credit score up 2 points, we'll do the deal next month. So August 2007, I go back to them and I go back to the bank because I put a lot of money into it, and I got an appraisal back too. The appraisal said I had 150 grand after putting in a lot less.
Wow.
So I was like, yes, like I'm brilliant genius, right? Because basically I'm trying to do my own flip, at least with a cash out refi in that sense. Well, August 2007, they said, oh, we just changed the rules last week. If you do X, Y, and Z hoops to jump through, then we'll give you the deal. Well, September 2009, I did everything they asked. I came back to them. They said, we're sorry. We don't do cash out refis for business owners anymore or real estate investors. And it was soon after that we started to hear all the craziness happen. Like the whole credit market just went super tight. The banks stopped lending. That's when everything, it was like sticking it's like sticking a stick in the bicycle spokes when you're riding your bicycle. You stick that stick in the spokes, you flip over the handlebars. That's exactly what's happening. And so it happened to me because I had all this equity trapped in the property. I couldn't get out. And then eventually the property declined in value to the point where I had tried to short sell the property. And then the bank wouldn't let me short sell the property. We had offers on the property, wouldn't even let me short sell it because they were owned by Lehman Brothers. And
Wow.
Lehman Brothers just wanted to foreclose on everybody. So eventually, about a year and a half later, I had to foreclose on my little McMansion that I put all this money into to eventually renovate and pull cash out. Ended up losing that property, foreclosed on it in April 2009. And it sucked. I mean, I got to the point where my credit score was like the high 400s by the time I was coming out of that recession.
Man, I'm telling you, brother, you and me both. Like now, in my case, it wasn't in 2009.
Mhm.
In my case, was in 2000. Actually, in between 2017 and 20, when I had all those properties that I was fixing and flipping in Houston, and Hurricane
Yeah,
Harvey came to Houston, and it just created a whole mess for us. But
right.
you know what, Chris? People don't talk enough about that because
Mhm.
I think as 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 human beings, or maybe as a man or a girl that has pride in their work or what they do or whatnot, they're ashamed to say, "Hey, at some point in my life, my credit score was in the high 300s." Which I don't know
Mhm.
if 300s exist, but you know what I mean by
Yeah.
saying that. And I had a car repoed, and I had a foreclosure, or I had multiple foreclosures. The first time I heard someone speak very open in an open environment, because the first time I heard is in the family mastermind, actually in 2020 when I joined.
Mhm.
I heard a Ron LeGrand speak about how he had $50 million worth of judgments in the early 90s.
Yeah.
And Chris, I'm literally going through the same exact thing, but it wasn't 50, it was about 15 million that I had on loans that went completely sideways, which,
Yeah.
by the way, I was able to satisfy 99% of that.
Yeah.
But there's always that 1% that you cannot please everybody, and
Yep.
but here I am, I'm sitting in the mastermind. There's like only like 60 of us, and Ron is in the middle. And he's talking about that, and I'm like a deer with the headlights on. I'm like, oh my god, I'm not alone. Like,
Mhm.
someone is actually have gone through something similar in the past, and he's very, he was being very open about that. And when they opened up the floor for questions, man, I was all over it. Like, I was like, me, I want to ask questions, right? And I started asking Ron questions about how he overcame all of those things,
Yeah.
and he said it fairly simple. But then I don't know if you know Rod Cleef.
Yeah.
I saw Rod in one of his events. I think it was early 2021, where he was talking about how he had 500 properties foreclosed on in between 2009 and I don't know what year, maybe 2012.
12. Yeah.
And I was like, holy shoot, like 500, like, it makes you feel like a tiny ant, because of
Yep.
the amount of property foreclosed on. And look at what he's doing today with multifamily, right?
That's right.
Um, sorry about that.
No problem.
Let me. I have to bring you. Can you? You have to literally gotta get out and rejoin. I don't know what happened.
Yeah.
But you're frozen on my screen, so you have
Yeah,
to
you were too
completely
for me.
exit and
Yeah.
come back, please.
Yeah. I'm glad it worked.
Yes.
So, yeah, I mean, if we're still recording, I'll just comment
Yeah,
what you said there.
we are. But Chris, I need you to get out like completely and come back because you're frozen on
Oh, I
my
do?
screen.
Oh, still?
Yes.
Oh, wow. Okay.
Yeah, I don't know why, but
Yeah. All right. Well, let me leave and come back. One
no
moment.
problems, man. Well, guys, we're having a conversation with Chris Miles here at the Real Estate Entrepreneurs Podcast. Uh, Chris is a financial advisor, but also a real estate investor, and we're actually talking about what people don't talk about, which is I'm just giving an update here on where we were. Where we're talking about what people don't talk about. I love this episode because we are number one, you're being vulnerable, Chris, and I appreciate you by sharing that story because every time you hear somebody or you see someone in social media with a very popular podcast like yours or mine, we immediately think, oh, this person is successful, right? Which is the
Mhm.
case. It's not, I'm not going to take any of that back. But by opening up and saying, hey, I had a foreclosure in 2009, and it was one of the worst years of my life, and it was very painful. And it shows to people out there that when you're in business, and I want to emphasize that right now, we are in business today, okay? Whether it's real estate, whether it's any business, let's just call it business. Businesses also fail,
Yeah.
and for multiple reasons that sometimes are even outside of our own control, right? Like a 2009 meltdown. Nobody was counting on that other than the people that really knew what was going on behind closed doors, right?
That's right.
um and because you share that, I started talking about when I joined the family, how Ron was talking about his $50 million worth of judgments. I was like, oh my! And
Mhm.
you know what's crazy? He still has millions of dollars worth of judgments from back then.
Yeah.
Like, and he talks about how he says, hey man, that's not gonna hold me back,
Mhm.
on the things that I want to do. And then Rod, I mentioned Rod Cleef because he's an amazing educator in the multifamily space, and he had 500 properties foreclosed on. Um, and and more people should come out and say, "Hey, this is what happened to me, so it doesn't happen to others."
Mhm.
Okay. And if you're going through a situation like that, then reach out to someone that's been through it before because they can lead you the way a lot easier. You see, I didn't have anybody to turn into when I was going through it because I honestly was not on a mastermind. I wasn't part of any groups. I didn't have mentors either in that space. I kind of like did it on my own for the whole time. I winged it. Um, but today, if somebody's going through struggles or whatnot, reach out to somebody that's gone through those, and but you were gonna mention something, Chris, and I held you back.
No, you're exactly right. Like we tend to learn more from our painful experiences than we do from our successes, don't we? From the failures and so forth. And it's really only a failure if you don't really learn from it. Because, like you mentioned, like yourself, I mean, 15 million. I mean, I was a little over $1 million of debt. And I thought that was hard. And for a lot of people, that would be. But 15 million is amazing. Then you
And
hear,
Chris, I was not more in debt because I couldn't hire people fast enough to throw into new projects.
Yeah.
Now, if you ask me today, will you go back and do it again? I would say yes.
Mhm.
But if I had to do it today, I would say no. Like today, I wouldn't do it. And it's not because of the level of risk or anything like that. It's because I learned that that's a very high risk business to run.
Mhm.
The model is very high risk. And I was always on the losing end, even though when I didn't know about it.
Yeah.
Right.
That's
Um,
right.
and
And
you only learn that by experience.
you do, and that's what I look for. Like, even when I look to invest passively in other people, I look for those that actually might have been burned, that have been through multiple market cycles, right? Like, where they've been through the highs and the lows, and I'm curious to see how they came out and what they learned. Like, for example, when you were just sharing your experience, it reminded me there was a comment somebody put on a YouTube video when I had you on my podcast. They said, "Oh, don't listen to Ricardo. He didn't mention that he lost money." I was like, who gives a crap? Like, the thing is,
Ex-
he's here today and he's teaching people how to get through that. Like, we've all gone through crap. In fact, I trust the person that says, you know what? I went through some really hard times. I lost some money. I got my teeth kicked in on some deals. I trust that person way more than the person that says, hey, I've been perfect, a perfect track record since 2018. I was like, come on, everybody and their dog made money in 2018. And you can be a moron and make money in real estate in 2018. What were you doing before that? What did you do after that in 2022 and 23 when things shifted and changed? Did you weather that okay? What did you learn? Were you able to pivot and move and shift? See, that's what, in my opinion, brings trust. It's not about the person whether they lost, it's whether they learned from it, gain that experience, and then can make more money because of it. They became a better investor as a result of what they went through.
And to be honest with you, Chris, I lost money. I probably lost more money than that person ever will make in their entire lifetime.
Right.
Okay. And I don't know, maybe I didn't mention in your podcast
Mhm.
into detail the amount of money or how much it was or whatnot, because we only had a short time.
Mhm.
But honestly, I mean, who hasn't lost money in their life? Like,
That's right.
we all take some risk at some point, even if you're the most, what do you call it, the most or the safest investor or reserved the person that, hey, your risks are so calculated that
Mhm.
it's almost impossible for you to lose. And even that one person will take a small risk at some point, and the stock or the market or something will go in a complete different direction.
Yeah.
So
Or even in business. I mean, how many times we might have tried to, especially if you're in the real estate business, you try a marketing strategy that fell flat, right? That's typically a risk, an investment that you lost money on, and that's okay, especially if you know how to manage that risk and make it still work out.
100%, man. I had to come back to Venezuela this week because I actually came earlier. I wasn't supposed to be here right now. I
Mhm.
was supposed to be in Houston because I had an event, a real estate event in Houston, 2 weeks ago, and some things happened here in my call center where I'm like, I need to go back right now. And what I had to do, I had to postpone my event until like October. Well, guess
Uh-huh.
what? I was taking a risk when I was doing my real estate event. And by the way, I've been doing real estate events since 2019. For the first time ever, I ever postponed an event. And guess what? That postponing the event will cost me money. Now, it's not a
Yeah.
failure because it was postponed, but it
Mhm.
will cost money. So if you're in business of any kind, you're always taking risk.
That's right.
Even when you are a worker going for an interview, you're taking a risk. What risk are
Mhm.
you taking? The risk of being denied the job, right?
That's right.
Um, so let's talk about that, right? Like about your 2009 foreclosure.
Mhm.
Was it how many properties? Was just one property? Like how was that?
Yeah, by that point, I'd already liquidated everything.
Okay.
I sold off stuff. I was at that same time, by the way, I was hiding our family vehicle, our family minivan. I was hiding it in the garage from repo guys, right? You mentioned about repos.
Yeah.
In 20, I think it was the end of 2007, I saw the writing on the wall. I was in the hole like 15,000 a month and sinking fast. I was running up credit cards. I was running out of credit and everything. And so, and that's partly because not just my real estate, but I also started a business with another guy named Garrett Gunderson. If you ever like heard of him, he's been in the financial space, and we started a business together in 2007, and we were focused towards real estate flippers. So 2007, they got hit fast and hard. We weren't making money because they weren't making money, and so it was like the perfect storm. So I was negative cash flow in my own personal and business life, um, and so I ended up turning in my car keys to the dealership with my Mercedes. So the first thing I turned in was my Mercedes. I said, "Here, take it, because in a month you're probably going to try to take it from me anyways. So take it back." They ended up auctioning it off for 30,000 less than what I owed. So
Wow.
then, just a month or two later, I'm getting phone calls from creditors saying, "Hey, can you pay back the 30,000 you owe us for the Mercedes?" I said, "Okay, well, what are you proposing?" "Well, if you could pay us $1,200 a month, we'll do that agreement." I said, "If I could have paid $1,200 a month, that was more expensive than my payment. So if I could have paid $1,200 a month, you wouldn't have the car to auction in the first place. So no, I can't
That's
do that."
crazy.
And I remember the guy on the phone one night, one of those guys that called me. It was like 7 o'clock at night. I'm burning the midnight oil, trying to work and figure out how to get out of my mess. I was frantic. And he just chews me out. He says, "You know what? You're the reason why our country's in the financial situation that we're in right now. You're the reason why everybody's suffering." And I said, "Hold on. I hired people just like you so you could have a job. I paid hundreds of thousands of dollars to people just like you to have a job. And you're saying I'm the reason this country is failing? Screw you." And I hung up the phone. And I was pretty pissed. And I'll tell you, I mean, eventually I did settle, like I owed 30,000. We settled for like $7,000, like a couple years later. Um, and that's what I did. Like I was settling debts and whatnot because after I sold off everything, even including, foreclosing on my house, luckily Homestead Act protected me so that they couldn't, claim to pay back what was negative on the mortgage. But I mean, there was a lot of money still owed. I had family and friends I still owed money to. I actually didn't even pay them back till about the mid 2010s. They were the last ones I paid back. In fact, it's funny because just like the comment on your video, somebody commented on one of my things back around that same time. They're like, "Oh, this guy's full of crap. Like he lost money. He's not rich." All that kind of crap they were saying, right? And they didn't know I had recovered since then and started making a lot more money. But I actually just told them, "It's like, when have I ever made it a secret? Like I love letting people know that I lost a lot of money. Like I'm not saying I'm proud of it. I'm not saying that at all, but I make that as part of my story because I am who I am today because of those losses, right? Because of those collector calls calling in multiple times a day. I mean, for example, mindset wise, if you're ever struggling in business, one of the things I had to do is recontextualize my reality because I'll be honest, there was a lot of sleepless nights. A lot of times I was wondering what to do. My wife at that time, she's now my ex-wife, but my wife at the time was saying, "Should I just move out into my sister's basement with the kids until you can figure your stuff out?" Like she was talking about taking the kids and leaving, right?
Wow.
I mean, my whole world was falling apart. Not to mention, I was the guy who teach people how to get out of the rat race, and I was back in it. So I couldn't teach people how to get out of the rat race anymore because now I look like an idiot because I'm out of integrity. So I started teaching different things and doing different things.
That's an identity problem, right? Like you're like, hey, so I'm the guy that is supposed to show you financial freedom, how to be an investor, and where to put your money and grow it and all
Mhm.
that. And here I am,
Broke.
broke, no money. I'm getting repoed. I'm getting houses foreclosed on. I'm in debt, credit card debt. But that's what makes you grow,
That's right.
because eventually you have to reinvent yourself.
Mhm.
And what's lost is lost. Like, okay,
Yeah,
if you get stuck on who you were, you'll never be able to get out of that situation and be able to move forward. That's what I
that's
learned
correct.
from Ron LeGrand that day. I asked
That's
Ron
right.
and I said, "Ron, how do you move forward from the $50 million judgments?"
Mhm.
He says, "Son, it's fairly simple. I had to put money on the table to eat and to pay rent and
Mhm.
to continue living life. And I was not gonna allow those judgments to hold me back into the things that I'm doing that I was doing back then or even today." And that gave me a whole different perspective because at some point I was going through a lot of like I never felt you know how they have the imposter syndrome? Like,
Mhm.
I never felt that way, but I felt like I was headed that way.
Yeah.
Like, okay, I'm gonna, because somehow I always kept something coming in on my end to be able to pay bills and to be able to like juggle money around and still have employees. And I don't know, man, you become a magician in when things like that happen. And
Yeah.
now I did sell my house
Mhm.
that I built with my wife, and that was a very hard conversation. I was like, look, I'm 5 months behind on this thing. I know we can be here for a year if I want to.
Mhm.
But honestly, this $5,000 payment right now, it's just, I just don't see it getting better. So why don't we just get rid of the property? We have
That's right.
equity in it. Let's move on. And for her to come to terms on that was very hard. Like, where are we gonna go? I said, I don't know, to an apartment. Like
Mhm.
like 99% of the other people that live in apartments today, right? And and she's like, okay, let's do it. So we sold the house. We were able to, at least offload, a big chunk of the payments. And then, I mean, credit cards, like, how do you fix your credit? Like, did you get into one of those credit repairs, or did you just negotiate with all the collectors? How do you do it back then?
I kind of learned to do it a little bit on my own. I had learned how to boost my credit score up before that too, but I mean, I did. I mean, it went pretty bad. I didn't file for bankruptcy. I'm just too dang stubborn to do
Me
that.
neither. And I was told, Chris, by three different attorneys,
Yeah.
you must go file for bankruptcy. And the
Mhm.
thing, and the reason, and I tell you right now, the reason why I didn't do it, it wasn't so much because of, like, okay, I'm gonna be able to wipe everything out and like start from scratch.
Yeah.
It was because I didn't want to, um I didn't want my private lenders to get entangled in it.
That's right.
I wanted my private lenders to know that if they wanted to foreclose, they could do it, and they didn't have to wait for some bankruptcy judge to dictate how they were gonna get paid or whatnot, right?
Exactly.
Um, my credit, honestly, when you're at the point of bankruptcy, your credit is below 500. You're somewhere
Yeah.
around the 400s, right? So,
Mhm.
um, but that's the only reason I didn't file. And the second reason was because I was never broke mentally.
Yeah.
I always felt like I was still rich. Like, you know what? I own my time. I have health. I started. I was being grateful for plenty of things, even when some people might think about taking their lives, or whatnot, right?
Mhm.
And I was like, you know what? I'm healthy. I'm going through this situation because God decided for me to go through this situation, because and I had to learn from it one way or another. And I'm not bankrupt. I just have a cash flow problem right now.
Yeah. That's a awesome attitude because it took me a while because I actually was at a point where I was wondering if I should kill myself, right? Because I had life insurance on me. I'm like, maybe I should just kill myself and then at least my family would be taken care of because I'm
Well,
taking
I'm
them
glad
down.
you didn't, because otherwise we wouldn't be having this great
It's
conversation today,
true.
brother.
I'm too much of a wuss. I don't even like pain. I don't even like using needles. So, I obviously that's the good news, but,
Wow.
but still, I mean, I understand what that's like, and I had to do the same thing you did. I had to go to that point. In fact, I remember reading the book Never Give Up by Donald Trump because he talked about his failures in that book. And he would talk about even if there's 20 negative things, he would find the one positive and hold on to it. So I did the same thing. I said the same thing you did, which was, okay, today sucks, but at least I'm alive, I'm breathing, or at least I can do something. I have my body. I can still work, even though I'm flat broke, even though I have nothing to show for it, even though there's collector calls calling all day. Oh, by the way, collector calls, I started calling them I love you calls. Because the truth is, all of my friends, they stopped calling me. Once I didn't have money anymore, you kind of find out who your true friends were, right? They wouldn't call me anymore. But man, those collectors called me every single day. They were like my best friends. And so I would call them, I love you calls. And so when I'd answer the phone, I'd be like, hey, how's it going? Good. I'm here to call to collect a debt. Yeah, I know. Yeah. So we want to see if you can pay us back. Nope, I can't. Okay, when are you going to pay us back? No clue, but I will. All right, well, we're going to keep calling, right? Yep. Yeah, we'll talk to you soon. And that was it. I had to like really treat them like they were like my best friend calling me up to say hi, and checking in on me. And and that helped because it got me this enough faith, that those fumes of faith that you're running on, like when you're on an empty gas tank, you're just running on fumes. I was on those fumes of faith, and it got me just enough to keep persevering to the point where the right relationships started to show up. Our business that we had together now all of a sudden was skyrocketing in 2009 into 2010. Started to help me dig out of that hole. Then 2012, I actually went and broke off from that partnership and launched Money Ripples. So I'm starting from scratch again with a non-compete and had to do that. And even into 2015, I was going through a divorce and stuff too. So it's like hitting the reset button again. I had all these things up until really about 8 years ago, 2016, things really started to turn around. My credit score was still shot. I remember going in to try to get financing for a new car finally. And the guy said, well, yeah, we need to pull up your credit history. I'm like, oh, I've got a history. Wait till you take a look at that. And he pulls it up and he says, man, he's like, I don't often say this, but your credit score would have been better had you just gone bankrupt. and I think at that time it was in the 500s still, maybe the high 500s by that point. And I said, yeah, I know it's rough. And so I got like this 22% car loan for that vehicle that I was able to get financed finally through the bank. And, and I just had to rebuild it. But getting my cash flow under control, start rebuild, having liquid reserves. I'll tell you, if I had a lot more liquid reserves going in, not to mention, like, I wish I did what you did, because the way you sound like you pivoted quickly, right? You're like, sell the house. I was so stubborn. I'm like, no, there's got to be a solution. There's got to be a way that I don't have to sell this house. I thought I had to put the stuff in front of me because that's where I put value. I didn't value myself. I didn't have a high self-worth. So I would buy nice stuff like the Mercedes, and I'd buy that nice McMansion and everything to show people how much I'm worth. But in truth, I felt worthless. It's amazing when you lose everything, you start to realize that you have everything, that you are enough, right? And when I lost everything, that's when I got non-attached to stuff. That's why I don't give a crap about what kind of car I drive or whatever. I drive a Nissan. I can buy the Lambo anytime I want. I just don't care to, because it doesn't mean anything to me.
You don't need to show anybody like, oh, hey, look at me, I got money. Like,
yeah.
I used to be like that too. I do drive now. Every car I buy is a used car. It's probably a 4 or 5 year old car.
Yeah.
It's already depreciated like crazy.
Mm-hmm.
I tend to like drive the new model, like, they they look like the 2024, but they're like 2017. You know what I'm saying? Like
Uh-huh.
that they're still, but I used to be the guy paying 90 grand for a Mercedes, like, or a BMW, and
That's
then
right.
my payments will be like outrageous, like,
Mhm.
Today I'm like, nah, I don't need any of that stuff. Like, I'm like, if I can have a $500 car payment, I'm happy with it, and as long as that car payment can take me from point A to point B, and if I can have the car paid off, that's even better.
Mm-hmm.
Because I don't have to worry about a payment anymore. Like, and
That's right.
if everything goes to hell, guess what? I got my car. It's not gonna get repoed.
Mm-hmm.
As long as I keep insurance on it, and something happens, I'll get some money for it. Um, but I'm so glad you're sharing all these experiences, Chris, because I don't know, man. And you'll find this in the family. Like, the more you get to know people you don't know, because the group is so big now
Mm-hmm.
that there's a lot of people we don't know. Like, I've
That's
been
right.
in it for 4 years now, and there's people I'm like, you've been here how long? I can't believe this. So I was talking to Steve Richards,
Mhm.
and this is like 2 years ago. We were doing a podcast together. Like, I used to bring all my equipment to the family and record the podcast while we were there for the meetings.
Nice.
And he asked me for a ride to the airport,
Mhm.
to like the car. He was gonna rent a car. I forgot what it was, but I took him to the car rental place.
Mhm.
And on the way there, he shared with me a lot of his losses. And I looked back and I said, man, I didn't know this about you. And
Mhm.
and he's like, oh yeah, brother, this is, I went through this and this and this. And there are so many out there now that because they've been operating for a very long time, that had similar problems like you and I and Steve and Ron and but they somehow they found ways to overcome all these challenges and to reinvent themselves, which is why I invite everybody to do is like, don't get stuck in the middle of hell.
Mm-hmm.
If you're in the middle of hell, you need to continue moving and reinvent yourself. Now, don't be stubborn like Chris, where he was hoping for a solution to the problem, right? Or the
Mm-hmm.
challenge. I pivoted into wholesaling. You see, I didn't like wholesalers. I
Mm-hmm.
was like, wholesaling? Oh no, I don't like you. Like that, your numbers are always wrong, and you're picking up these properties high. I don't have a profit for me. It's all for you. But I figured that if I could pivot into wholesaling, I could, you know, I could create cash fast, and that's what we did in between 2018 and literally last year.
Wow.
Until I found out about what owning a call center can do for me, and I'm like, okay, let's do this and go figure. You know, it's now
Mm-hmm.
it's my future.
Yeah.
Um, but man, I feel like we could be here for hours, Chris,
We've
and
already been here an hour. Yeah.
yeah, and I think we need to do a part two of this podcast because we need to invite like a couple of more people and have
Yeah.
like a little debate on who had the worst experiences on getting cars repoed and houses foreclosed on and money lost and things like that. Because people need to be aware that if you're going in business, you're prone to be taking part of a risk like that.
Mm-hmm. It's true.
And there are people, Chris, you know this, that should not take risk.
Mm-hmm. That's right.
Now, one last thing, message from you to the audience, Chris. How can they reach you? What can you do for them? And how can they find you?
Yeah, everything we have is Money Ripples, right? So moneyripples.com, at Money Ripples for social media. We've got the Money Ripples podcast that you were a guest on here recently too.
Yep.
Everything's Money Ripples. And good news is, like all of us, we pulled out of this crap, right? We're out of it. My credit score, by the way, is actually over 820 on all
Wow.
three bureaus. So Merrill Chandler actually in the Family Mastermind helped me even get it above the 700 to the 800 marks now.
Wow.
But yeah, now what we do is we teach people how to create passive income, like actually help them one-on-one to find those passive investments and how to do it. And then we also do like this max ROI infinite banking that we teach about too. So we talk about all that stuff on our podcast and, really good information, especially if you're looking at passive income and or how to get your money working harder for you. So you have to work so hard for it.
Awesome, brother. Well, go find moneyripples.com, guys. Go find the Money Ripples podcast. Tell Chris that you saw it here at the Real Estate Entrepreneurs Podcast. Chris, we're going to have to do a round two of this. It's official, but we need to do a couple of more people. Like,
That'd be
let's
fun.
get creative and bring a couple of people to talk about the horrors of being in business, right?
That's right.
And what things, because I just want to create awareness that, hey, these things happen. You might be involved in it. There's a saying that says, in life, you're either coming out of a storm, dealing with a storm, or headed towards a storm.
Mm-hmm.
But it's how you handle the storms what matters. So,
Right.
with that being said, guys, thank you so much for being here today. The Real Estate Entrepreneurs Podcast. I'll see you on the next one.